Working. Um, Wanted to mention that I dated the screenshots for today only for the purpose of storing them in my library. It isn't my intention to actually place the trades until the signal is there. Yep, that's fine. For your journal purposes. Um, you also seem to have the system audio on. Okay. Well, I don't want to touch it now. Sorry, does it give it some echo, does it, when you're in the video? I haven't watched the video, but is it, does it give echo in the video, does it? Anyway, it could give some echo. Okay. Well, next time I'll turn it off. This will be the last one this week. I'll see you all next week. So good luck with the trading and the FOMC tomorrow morning. Um, I've got to head to Tamworth. Help run the farm. His dad's had an accident. So I'll make sure next week that I'll not have the system audio on as well. Right. Brian was asked me about my report this morning. That when I suggest that once the volatility kicks in and the market does start to move, it'll get aggressive. You can see that in any sort of market environment when it's contained and held back for a while. That when they do start to move, there's a huge scramble for getting the best price, and it'll move aggressively. As a trend trader, the question is, how to best prepare for this eventuality is, keep an open mind is all I can suggest. Um, you know, don't get bogged down in the thinking that this is going to stay forever, because it won't. The markets will trade sideways and then they'll get in a trend, and when noticing those trends and seeing those cyclicity and the getting on board, that is the sort of the key to it. So just keeping an open mind. You can, the news going to websites and you know they tend to they'll be behind the curve. The market might have burst already, and that could have happened overnight. The stock market had a bit of a fall last night. It'll be a week or two before people start going, oh, hang on a minute, this sell-off is quite extensive. And then there's just sort of a bit of a process to it. You get the disbelief that it's happening, then you get the panic that, oh shit, we need to get out, and then it's by that stage you've hit the bottom. So, and by that stage, then the market will start saying, oh, we need a 5% correction anyway. And then when it goes far past 5% and start heads toward 10% retracement, you go, well, perhaps this is the bear market that we all expected. And then, by that stage, everybody's bailing out of things. And yeah, it can be, I just wouldn't rely on news articles. I'd use your own common sense. If you've seen stock market bursts before, it can be rather rapid. And yeah, just watching the data really. At this stage, economic data coming out of the US is a mixed bag. We get a couple of good figures and a couple of bad figures. So I think that's why Janet's sort of not wanting to talk about rates running early in 2015. But is the stock market worth being up at the highs that they are? Their earnings would suggest that they're doing okay, but in terms of their stock valuations, I don't know if there's necessarily needs to be that high. And when you compare that to Australia or Europe, our stock markets aren't near their highs. Well, our stock market in Australia is certainly still good 25% away from its all-time highs. And so what's the US got that the other countries don't? And I think that imbalance needs to correct itself. Geez, I'm rambling. Sorry. But yeah, it's hard to say. Be prepared, and I'd say that the best way to be prepared, is don't get married to an idea that this is going to go on forever, and keep an open mind for any opportunities. And I appreciate that you appreciate my reports. Cool. So we've been sent this one from the Kiwi Swiss, and you sent it to me again with your horizontal support lines. I think they need to be a bit high. You need to see the market reacting to it, and there's clearly a double top here of some sort, and these lows. So you've got your fib in the right place, with the first bar that crossed the 50. That's good. You've drawn that well. You've also drawn the extensions to see how far it can go. Got a trend line which shouldn't contribute to your score, although you've suggested it has, I presume, here. The fact that you've written it in, or I'm not seeing the sort of account here at all. Some people tend to just write what they see, and that's okay. Can't exactly say you're having EMA support at this stage. Fibonacci retracement, you've got the 618, yes. Score, okay, you haven't actually given the score, I see. You're just setting this up, looking for it. Alright, and you'll fill it in once you've got it. Okay, cool. Well, just having a look at what I've put in, there's the Kiwi Swiss, and I was looking at this. There seems to be a bit of a zone here. It's about, looks like about a 50 pip zone, but I haven't looked on e-signal to see if there's any further support resistance lines back in historically beyond what I can get in MetaTrader, which with AxiTrader is only sort of this year. But I've got a support line here, which the market's obviously reacted to. It's basically 77, 00, and then there's another one at 77.50, which is this high, which obviously then became support. So you had yours down here somewhere, so I'd get them a bit closer to the markets. Obviously, it needs to be a valid one, but you want something to see where the market's reacting to. Yep. And then we look at the Kiwi. Oh, this is a weekly. I don't know. I haven't liked the Kiwi for years, but what am I seeing here is, yeah, there's a support line that you've got there. You've only got one. It's under a lot of pressure at the moment. Hidden divergence, nothing there yet. Trendline support, no. I wonder if you realise this is a weekly chart. You do? Okay, you want to trade this to the weekly. Issue with the weekly is that you need to really have a long-term view. And I think Wheeler's gone too far too fast with these rates. Supporting the US, the Kiwi economy, or trying to slow it down is what he was trying to do with raising rates, but it's killed off their largest export business. And by having a high currency, and he's on one hand he's saying, oh, we need to have higher rates, on the others he's whinging about a higher currency. Well, you can't have both, mate. So I think that there may be a period of no move in rates over in New Zealand, and then he'll have to turn around and start lowering them again, and that'll obviously push the Kiwi a bit lower. So when you're trading on the weekly, you're looking at 3 bars or 4 bars in a weekly is a month, and looking at the cycles here, you're talking maybe two and a half months for a cycle. Maybe even 3 months for a cycle. So this little cycle here is obviously 1.5 months, but this one here is almost 3. So that's a long period to be opened to the marketplace, and therefore you'd need to have a really strong fundamental view and opinion on it. 88.42 I see as a huge resistance level, being the all-time highs back in 2010, and it failed to get through there. I'd kind of look for it to, I'd be looking to get short like the euro, get short around here somewhere. That said, if it fits your analysis on the weekly, if you see a swing low like this, and you believe in the fundamentals of the Kiwi economy, go for it. You know, there's nothing wrong with matching your technicals and the fundamentals. Yeah, if you get a buy zone around here somewhere, then that might be an opportunity. There's nothing wrong with the technical analysis you've got there. Okay, the pound. Yeah, a lot of us are looking at this, waiting for a change. It seems to the 618. Waiting for price to enter to complete a ring low formation. Trend line intersects at this level and will retrace back to the support level. Waiting, yeah, we're just waiting to see the buying. Forex news, so FOMC might be the get go. If you go through all the US dollar pairs, you'll see that you know, they're all overextended and at the either oversold or overbought. Aussie not being one of them, but the Kiwi, the Euro, the Pound, you know, the Yen and the CAD, they're all at the extremities. So, and the extremities being a bullish US dollar, and you know, so I think that's got to have a bit of retracement. So here, the Pound, I've got the weekly, I've got this low coming out to this low here. And I've also got the daily trend line from that low to that low. We're certainly around this level of these highs, which is 69.20. But you know, as I wrote the other day, this was a swing low, but I didn't really like that. It was testing $1.70. I wanted it to close above $1.70. That's a key level. If we go back and look at the monthly, you can see $1.70. This higher one here. It's actually 70.35 is the high there and the low there. So if we see buying intention here, and we might see that you know, this bar could finish quite bullish tomorrow morning if the FOMC doesn't go the way the market's expecting, and the market's expecting a bullish US dollar because they're expecting that Janet's going to raise rates early 2015, especially with the great jobs number they had you know, at the start of July. They'd be saying, well, you know, there's every reason why Janet should be raising rates. You know, as I mentioned before, I disagree. I see the economic data coming out of the US as being a mixed bag. The good ones are really good, and the bad ones are mediocre. They're not hugely bad, but it's not like it's not cohesive in the one unit like the pound was, or the UK. UK starting to show some breaks in it as well. So I don't know if Janet will be moving in early 2015. I'd say it's probably later than late 2015, and maybe she comes out and says that tonight, which will, you know, put some pressure on the US dollar, and we'll see this thing rally and get an opportunity on Friday. I won't take it as I agree with you, but technically it did look good. Okay. Cool. That's the pound. The CAD similarly, you know, I think the CAD is, as you'll know, I'm a buyer of this. The weekly certainly looking a lot better than the daily now, in terms of you've got that trend heading back up. For those who traded that weekly, or if anyone did, I don't know if anybody did, but traded that weekly, you're sitting pretty happy. I still don't think it'll get up here, you know, towards $1.12. Right on that resistance line. There seems to be a bit of a area there around 109. I mean, it could well, and I could be totally wrong. And you know, you wouldn't be looking to go in it on a daily until you've had that cycle above the EMA. With the momentum of this high here, it's unlikely that it's going to continue and press on. It may just pull back, go sideways, and you know, do this kind of action and then kick on higher. Personally, with the stronger economic data coming out of they're probably about mixed, both of them. Both legs, both the US and the Canadians are showing mixed economic data. Again, neither of them are cohesive, so this could really be starting to get choppy. But unlike the US, I think Canada's got a lot further to run because they're at the bottom of the cycle, whereas the US are probably in the mid to 60% recovery of their economic cycle. So, I think the Canadian has a lot further to move than the US. Certainly has a pretty poor run for the last 2 years, and I think that's got to sort of perhaps turn around. Around 104. Not parity, not yet, but certainly should be down around 104, 103, and heading that direction. Looking at the charts right now, though, there's nothing really there for us with a strong buyer bar, and we're out here in the middle of nowhere, no sign of sellers yet. So again, it's just a matter of being patient and saying, well, we've got the reasons. We just need to see the price action. Okay, so sorry, I should be looking at yours. It's broken that trend line. Yeah. Fibs placed and price action has bounced off the 618, waiting for price action to potentially trace to 109. This area here, looking for the next ring low to take this long. Would you suggest waiting for price? This is the daily, right? I'd certainly suggest waiting for price. If you want to trade it and participate in it, go down on the time frames. You'll get the cyclicity on the 4 hour or the 1 hour, where you'll find opportunities. The thing starts trending and you jump on board. But on the daily, there's nothing there. You need to see a cycle now above the 50, because we've been under the 50 for what, 1, 2, 3 cycles under the 50. You need to see a complete cycle above the 50 before you start getting going long on the daily time frame. If you're trading the weekly, well, then you've missed the boat. Too late. If you want to be buying this thing, go down the time frame, because there's no entry signal on the daily. Okay. Okay, I think that's all from your emails. No worries. Okay, this one came in yesterday. Euro yen. Euro yen. Don't have here. Euro yen. Right, trying to do a phase 2. Certainly in the zone for it. We're certainly getting momentum taking off. So that's 2 out of 3. Do we have a strong horizontal? 2 out of 4. Sorry. Do we have a strong horizontal? Well, you could say that's a pretty strong horizontal. Did it get to it? That's another question. Yep, you'd say that's a pretty strong reasons to be buying. I think some people went in on this day here. Their stops probably halved their stop by bringing it up to underneath this bar. Can you go in now? Well, the question then is, what's your risk reward ratio? Because you're looking at about let's call it 100 pips for 120. Going under this low here, can you guys see that one? The little ring low that was produced earlier does make your stop only 50 pips, and therefore you're risking 2 to 1. Sorry, you're risking 1 to 2. 50 pips for 100 pips. But the risk in that is that you're a lot closer to price action and a lot further from the support area, and that'd be a concern. I'm not suggesting you shouldn't take the trade, but that would be my concern. Is that I'd prefer to have my stop loss under the support level. Things like the CAD yen stop losses under the support level, because if you move it closer, you're going to get taken out. Yeah, the support is obviously under here. That's where the stop's at. That's why you have the stops down there. All right. And so we're sitting. You'd be under here. And if you get there, there's a good chance that you could get taken out. But in the meantime, that would be probably a reasonable target considering where the 50 is going to go. And if we draw that, yeah, so that's the possible target area, really. So back to what you will. Where is your document? Oh, there it is. Euro yen. Don't tell me you're looking to. Oh, you are looking to go long. That's good. I was going to say, if you're looking to go short, I'll have to reanalyze it. I don't think you're ready to go short at any stage. No. Okay. Risking 1%. I'd like you to change that. If 1% risk on against the trend trade is not what you should be doing. It's too much risk. RSI convergence, bullish price action. I'll come back to RSI because I've noticed that you've done it wrong. Bullish price action, trend line support, fib retracement, horizontal support, long trade if today's closes. Okay, two things there. Trend line support. What trend line support? If you're suggesting these two lines here, you're just drawing those two together. Support means underneath, so you need support underneath. If you're saying convergence, well, you don't want convergence. Clearly you're looking at a phase 2 trade. If you're going long from here, you've got the Fibonacci correct, and we can see that it's turning on the 1.618. That's fabulous. That's about the only thing you've got correct. Oh, the horizontal 136.31, which I notice is right where your stop is. Surely you'd put your stop a little underneath that, even if it's 5 pips, but maybe 7 or 8 pips underneath that. Sort of go to 136.25 or something like that, 136.23. Just to be a bit below that support line. Now, trend line and RSI, what we need to see is RSI divergence, okay, not RSI convergence. And we can see that this low here, if we look at price, let me just grab a couple of arrows. If we look at price from that low, yep, to the price on this low here, we're clearly a lot lower in price, yeah? But if we then look at our momentum, here RSI is going a little bit higher. If I take that off, and you can just see the price in RSI, RSI is 21.7, to over here it's 24.1, so 3 pips higher, or 3 points higher. And now the momentum is kind of converging, yes. Price is creeping up, and so is momentum. But we need to see that divergence before we sort of look to take the trade. And now that that divergence there, we can. Trendline support, well, if you're drawing a trend line across here to find support, I think I can't see any trend line support going across there. And nothing. And it's not on our checklist either, trendline support. Okay. Be careful which checklist you're choosing. Be clear about it. Checklist. I mean, with our checklist, I'm pretty clear about what we need on it, and they're must-haves for a phase 2 trade. And convergence in RSI is not on that checklist, nor is trendline support. But the other three are. Okay. So and certainly don't do 1% risk when you're trading against the trend, please. Okay, right. Another one that's looking at the pound to go long. Pound to go long. That's the basic of my lookup, but let's have a look at yours. If price breaks yesterday's high, yeah, obviously we need to cancel it now because it didn't. Yeah, Fibonacci's good. $1.70, yeah. Now we're looking at this support line here. You've got hidden divergence, good pickup. Price breaks, higher highs, yes. Horizontal bullish price action. Well, if we get triggered in, yes, we'll have it. Above the moving averages, yeah. EMA support, yes. RSI convergence, yes. No levels of resistance in the way. No, not really. Once we get back through $1.70, there's not much. Trendline support, not yet, but it's getting closer now. Hidden divergence, yes. Risking 0.5%, good. Okay, entry at 5 pips above it, cool. Rightio, that's all good. Now it's just, okay, we need to readjust our, we need to be patient and see the buying. Waiting for that to come in. It'd be great if this is through FOMC, you get a big low test. Or a touch of this area here and then rejection of that, close up here somewhere. That'd be great. Alright, can you please show on this what the fib support from the checklist, referring to the Euro Yen chart. Euro Yen, fib support. Yeah, you're clearly trading phase 2, so you draw that previous phase 2 to get the next phase 2, and we can see that we've got the fib support there. And the checklist, well, checklist, you guys should be knowing the checklist off by heart now. Should be a part of your, what do I call it? Your unconscious competence, changing gears without thinking. Checklist, range, reversal, which is what this is, the trend reversal, phase 2, horizontal support, RSI divergence, bullish price action, fib extension. Okay. Fib extensions for phase 2. Yeah. So this pound one, that's good. Target not set, fabulous. But we need to now reassess and wait for seeing the buying. Okay, I had a question here. What's the difference between sell stop and sell limit? I've read on a couple of occasions that we should use limit orders rather than stops. No, but no real reason given other than if you use a stop you won't make a profit, which is not really an explanation. I look forward to your thoughts. Okay, all right. What can we do? Okay, let's look at this one here. All right, what a stop is effectively a sell stop. A sell stop is saying, okay, I want to get short, but I don't want to get short until price comes back through this level here. Yeah. For argument's sake, that's what a sell stop is. A stop is waiting for price to happen, and then it's just going at market, and that's the only way you might suggest that you wrote that it ruins your profit. You can get slipped in a fast-moving market such as during FOMC. It may slip you So you're looking to get, you want to get in at a price of 157.00, but you get filled at 156.95 or 156.50, you get slipped 50 pips or something like that, and you get filled down here. That's you can't avoid that. The only way to avoid it is don't have your orders in the system during high market impact news announcements such as the FOMC at 4 o'clock tomorrow morning. But the idea with the using a sell stop is that we're seeing that momentum, we're seeing that shift back into selling, and we're going with that rather than presuming that it's going to happen. We see it happen and then we go with it. Okay. Over here, we're looking to be sellers because we believe that the market's going to go down and make a new phase one long, and we go, well, we wait until this bar and we go underneath this bar because now we can see the selling intention in the marketplace and we want to go with it. That's a sell stop, waiting for the market to pick up steam and then you're going with it. Same with the buy stop, is you're not trading to go long until you see the buying coming into the marketplace and saying, well, I'm going to go and I'm going to be a buyer here, buy stop, and price comes up, triggers my order, I get filled, and then I'm in the marketplace and away we go. Sell stop comes down, hits my order, triggers me in, and I'm now short and the market's continuing down. That's stop losses, buy stops and sell stops. A sell limit, on the other hand, is the market's coming up here, and for argument's sake, you might say, well, I want to sell, this is where the market's going to turn. That's presuming that the market's going to turn. You might have thought, well, I'll get short on the 50 EMA because it always turns on the 50 EMA. Well, you don't know that it's going to turn. And once you've identified that, where are you going to place your stop? You don't know where to place your stop. You might go, well, I'll put it above this horizontal line because it's going to turn on that horizontal line. You might go, well, okay, I'll get short on that horizontal line, 5 pips in front of that horizontal, and my stop is going to be 5 pips on the other side of it. But you're presuming that it's going to happen, and to me that's dangerous. It's far better to wait to see it happen and then go with it and give the market 50, 20 points. In this instance, you're probably giving it 100 points or more. But it's better to give the market that in pips than get in too early, get it wrong, and then it's actually giving away good hard-earned cash of yours. So limit orders to me are dangerous because there's a lot of assumptions that the market's going to turn, and the market doesn't always do that. In fact, you'll get it wrong more often than you'll get it right. And similarly, a buy limit is, okay, well, the market's coming down here and I know it's going to turn here. Well, if you've got a crystal ball knowing that it's going to turn there, then let me know and we'll come to some sort of arrangement. But it's unlikely that you do, and you don't know when it's going to turn, and so you just get steamrolled. You think, okay, it's going to turn here, you get steamrolled and lose out. So limit orders are, to me, are dangerous, and stop orders is far stronger because you're seeing the momentum and you're going with that sentiment in the marketplace. In placing them, it's really rather simple. You have pending order. You got your order types: buy limit, sell limit, buy stop, sell stop. There's hundreds of ways you can actually manage orders with trailing stops and OCOs and all sorts of other exotic order types. MetaTrader doesn't have those exotic order types. It's pretty vanilla, pretty straightforward. You're either trading at market, which means I want to get now. I don't give a shit about time. I want it now, and I don't give a shit about price. I just want to get in. Yeah. And pending orders, as we just discussed, limits to me are dangerous. Stops are the way to go. Once you're in a trade, though, your take profit will be a limit order. Okay, waiting for the market to come up and get you out. That's going to, if you buy, that's going to be a sell limit order. If you sell, that's going to be a buy limit order. Okay, with taking profit, there's nothing wrong with taking profit. You don't go broke taking profit. Only if your profit's less than your losses will you go broke, but that's another subject. Okay, you're online listening in. Does it make sense? Clear that up for you. You guys still online? Can you still hear me? Yes? Okay, cool. Fabulous. Thanks. Alright. What we got next is Euro Kiwi. Interesting, that's just what we're looking at. Identified a sell zone here. Yes, the 50. You've got the fib in the right place. You know, RSI is sort of getting to the high side and certainly in convergence. Lower highs, lower lows, yes. Below the moving averages. So bearish price, waiting for bearish price action. Good. No levels of support. Fib retracement. You might want to go back in history and see if this is a huge level or not, and then work out if the risk reward is at least 1.5 there. For example, I'll do it for you. Is the easiest way to do it. First, make your MetaTrader screen active. Easiest way to do it is just put a horizontal line there and then go back to the monthly and see. Okay, that's not really the major support. The major support's down here. I would suggest 151. So there's 300 pips there. Or even more, sorry. 57. 600 pips. It is a strong horizontal, but if this is a strong trend, that we should reject that. Now we're just waiting to see bearish price action, and you obviously need to go, well, I'm risking 100 pips, and there's almost 300 in this just to that previous low. So that's a decent risk reward. So coming back to yours is we need to see bearish price action, yeah, which hasn't appeared just yet. It's good. And your pound, yes, everybody's looking at this. Trend line is good, but it's not contributing to it at this stage, which you've noted. That's fabulous. If price closes above 70, then yes, yeah, I agree with you. We may not get that now. We'll just have to wait until another day or two. This fib, I presume you're setting for targets, because it's obviously not for retracement. Yep, okay, cool. Just noticed I screenshot the wrong fib. That was the fib I used to get a set a target. Yeah, okay, cool. Monthly. Yeah, no, that's good, Joe. You might look to see that I've, with my trend line, I actually went to this low here. Gets it a bit closer than it is now. This is one of the reasons why I kind of think trend lines can be very arbitrary. So if you go to that low and say, well, this is the next significant low, and you miss this one, you get that one as well. Yeah. Then it puts it out here a bit, but yeah. I'll just get it a little bit closer than where you're at. So that's why I don't put a whole lot of stead on them. If they're there, then that's fabulous. But if not, horizontals are far stronger. Okay, that's good. So you're probably targeting the 1.272. If it gets to the 61.8, that's fabulous. But just going back to the euro yen, someone suggested I should put on the monthly. Was it euro yen? No, the euro kiwi. Sorry. Is there a trend line across this low to that low? Yeah, probably. We're not near it yet. I do remember this being pretty much all-time lows. I know 2008, there's more data going back beyond that, but pretty much all-time lows. But yes, I'd identify this as a potential as well. I'm just waiting for it to give me some selling. Okay. Right. Next one, pound weekly. Cycling along the 20 EMA and is in phase 2. Also last week gave a bearish bar. Daily chart may give a long setup on Tuesday or Wednesday. If the price does not get closer to the weekly 20A, would it be better to wait, or am I over analysing it? Not necessarily over analysing it. You can see that this 20 EMA, it didn't necessarily touch it. It's 69 is the Fibonacci support in terms of trading the weekly, which would pretty much match this one here, which is kind of where we're at, I think, isn't it? Yeah, just above it at the moment. Let me just take all of this off. And get the 20 on there. And go to the weekly. We can see that it didn't touch. It got close, and perhaps by the end of this week it might get close again. But just sort of, it's certainly coming off the boil. Going back to the daily. So I guess from your question here is which should you trade? If the daily gives you a long setup, or should you trade the weekly? And it's obviously still in phase 2. You'd have to go back to the CAD and have a look at that and say, well, the weekly gave us a very strong buy signal, and we were looking to go against that signal on the daily. Luckily, we didn't get in on the daily, but the weekly is still going. The longer time frame is obviously the stronger, but this is it's been a while since it's been back to the 50. Are you ever analysing it? No, it's good to sort of get an idea of what the longer time frame is doing. If we come to your daily, this red line, which is where we're at now, excuse me, I believe coincides with that red line there. Yeah. So you've just gone down a time frame. Yep, kept the stuff on there. So if that's the case, you'd expect the market to turn here on the weekly, which would be around the 20 EMA on the weekly, and if we get a buy signal, which is quite highly possible on the daily at around that same price, then you're getting the confluence of the weekly turning and the daily turning at the same time, which would be the ideal setup. Yeah. But it's always good to look at the longer time frame. Okay. This one, oh no, sorry, I've got to go to this one. Can you comment? Looks like yesterday's bar is a sell bar. If today's bar is a buy bar, there's a signaled entry. What are we looking at? Pound US. Again, this came in yesterday. Hidden divergence, RSI convergence. You can tick that because we're seeing with RSI convergence, divergence. It's in this momentum here that we're wanting to see it. Okay, hidden divergence, which you've identified and ticked, and that's correct to do so, is from cycle to cycle. Okay, so you've identified hidden divergence, but you could also say there's RSI convergence there. Bullish chart pattern. Not sure what haven't really identified it there, unless you're saying it's in this channel. But it's not clearly identified. You've ticked bullish price action, which we don't have at that stage. It was a high test bar which is bearish. And fib retracement you haven't put in. I don't see why not. You certainly could have it in there. Yeah. And I think this horizontal is probably a tad high. If you go to this one here, 69.20. Yep. Okay. Risking 50. Okay. I hope that's not your target. 71.97. Coming under that by 16 pips. You seem to have a very large stop. I don't know if your stop needs to be that large. 78.30, it stops all the way down here. I don't know why that would be. Maybe that's a typo and it should be 69.73. I'm not sure. I don't know. You might want to reassess that. Entry price, I would, at the time, I would say yes, but you know, that obviously didn't eventuate, and I think that stop loss was incorrect. Risk 1.23 should be a heads up. If that's red or orange, then you under potential risk reward targets, you should be looking at 1.5. Even better, you should be looking at risking 1 to 2. Yep. Okay. Yep. Down to the last email. Trend line going back to 2012. That's why you said that. You already had it. Yeah, it's not affecting the market at this stage, but that could be a potential target. It could potentially bounce off that. Who knows? You'd wait to see price action stops on it, and then you might go, okay, let's get out of that. Bearish price action, you don't. Not below good resistance. RSI convergence, no. Really? It's a higher high, much higher than price is, but I'd say that it's converging. I think that's a higher high. Trend line, no major levels of support. Excuse me. Yeah, that's all good. Potential short, 3 pips below high test. Rating 13 pips above high. Trend line, fall between. Yep. It's all good. And okay, so that's your target in here, or the trend line. Yep. Okay. Fabulous. Good stuff, guys. It's really good. I like the way you are analysing the markets, and those of you who are sending them in is appreciative, and I'd like that's from the previous cycle high. That's convergence, but even so, as I said, with convergence and divergence, it's this the most median move you want to see as converging. And yeah, had this been a lower high than this one, well, then you'd go, well, which it was, and go, well, then that's bearish reversal divergence, and that's potentially a good thing. So the question is, what am I looking at and why? This is my trading page, so these are the pairs that I'm kind of keeping an eye on. Not looking at that. I've just got that there because it's, it is Aussie. But that's the Aussie, and that's the way I see it. It's just stuck, not going anywhere. Euro, I want to get short, but from around here somewhere. Pound, I want to get long, but being patient and waiting. Kiwi, you know, prefer to be short than long. What's that trend line I've got there? Yes, take that off. Means nothing. Sorry, want to be short, but again from up here somewhere. Yen, I'm not really watching it. It's just there because it's a major. CAD, I want to be short it, and just waiting to see the price action. Euro CAD, I want to be short that. 50's just dropped under the 200. Get a sell signal up here somewhere, and that would be ideal. Again, I want to be short this because I'm bearish the euro and bullish the CAD, and I have been for some time. Aussie Kiwi, I want to be long this, and despite what some bloke said I read this morning, who thinks it's going to parity, I do want to be long this, and I just can't get an entry. Didn't like the look of it back here, which was a mistake, but that's hindsight telling me that. And now I'm just waiting for this cycle. So with this particular pair, I want to see good strong buying action back around 109, and then I'll be going with it. So if it can meet the 50 EMA back here in this area, that's where I'll be looking to get long, somewhere around there. And you draw your fibs, and you go, okay, that's a good area, the 618 and the 50, plus that strong horizontal there. Happy days, that's somewhere I'd be looking to get long it. CAD Swiss, this is the Euro CAD, just it's the same trade, but you might find a better opportunity on this one, so that's why I've got it on my page. CAD Yen, I'm actually in. Traded it up here, obviously out of the money at the moment, but it's been found good strong support here with the 200, and that's 94.00. My target is this previous highs up here, around there. I think I'm actually, no, it's not that high. I'm going 106. Oh, sorry, I'm going 96, not 106. Yeah, I'm going 96. So my target's around here somewhere. I remember where my target's from. My target is from. You do the fib from this high to that low. Yeah, that's my target's 96.90, just in front of that 50. Yep, that's where I'm going for my target on this one. Euro Kiwi, I'm looking at, waiting to get short it. Pound Yen. Yeah, out of the pound crosses, this one and the cable itself are reasonable to be looking at. The best of the lot, and I'm not looking at that. That's just because some other people are looking at it, and I'm not really looking at that because I've already got my CAD Yen on it, and I'm looking at the pound Yen, mainly because the pound Yen and CAD Yen are phase 1 trades, whereas the Euro Yen's a phase 2 trade. Do you set a target when placing the trade? On some I do, yeah. With the CAD Yen I did, mainly because I saw that as being quite a large resistance. We can see that it tried to break through it and failed, and I don't need to sort of hit the ball out of the park if I can get it there. I think it was a 4-1, or maybe even a 3-1, something like that. In terms of I went in there. 80 pips for 240 or 200 something pips is 2.3 or something. But I don't always, when trading phase 1, I don't necessarily always place a target. But in this instance, I did. Yep. Okay. Alright guys, that's us for the week, the month, or for the day, the week, the month. I believe the next one is 4th of August. Let's see that one. Oh, and in August there'll be 10 a.m. Okay, so that's the next one. 4th of August, 10 a.m. Then there's Chinese prop trading, so I won't be doing it Tuesday, Wednesday. Back on Thursday, Friday, something like that. All right. Honest action. What's that one? Forex trading webinar. Okay, yeah, no, this is it. Tuesday, Wednesday. Oh, sorry, Thursday, Friday. Anyway, you guys have got this schedule. If you don't, email client services. Okay. Thanks for your time and good luck with FOMC tomorrow. I shall see you on Monday. Have a good one and go the Waratahs on Saturday. Cheers, guys.